The Fed just scared the heck out of interest rates. What are they doing? We're going to talk more about that next. Hey there, this is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates, and we're going to start with those interest rates. So, really terrible week in the scheme of things for interest rates. Up almost 0.25% in 1 week, up into 5.89, into the high fives now. You can check out the link below to the average 30-year fixed according to Freddie Mac. Really big move week over week. So you can kind of see the trend had been over the last few weeks to kind of calm down and stay a little bit lower, and then we've shot right back up. And while you're down there in that link and checking out that Freddie Mac kind of survey, please hit that like button, hit that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. Now, what we want to talk about today, the Fed scaring interest rates up. What did they do? Why are they doing it? What did they say? So over this past week, the market digested the comments from Chairman Powell saying that he is strongly committed to fighting inflation by raising interest rates. This is nothing new, but the terminology and the adjectives that he's using is now telling the market that they're going to consider even more increases than maybe what they've said before. A lot of economists or market kind of makers and market people have said that, hey, they're going to raise rates and they're going to start to lower them back down. He's basically saying, we're pushing that accelerator pedal forward and we're not stopping anytime soon, right? So there's not going to necessarily be a lull. So they want to get a handle on inflation. Now, that might sound like all bad news that we're going to continue to see rates to go up. And yes, the trend has been rates going up. But on the flip side, I've got good news for you, is that Fannie Mae came out, the largest buyers of mortgage-backed securities, a government-sponsored entity, Fannie Mae, sure you've heard of them, and they came out with an article that says, hey, we think interest rates are going to be in the mid-4s in 2023. So yes, we might have a little bit more pain of rates going up, but we could likely see rates going down next year. And I'll put a link, actually a couple of links below to the article I found on CNBC and then to Fannie Mae. But long story short, you marry the house and you date the rate. And I'll link up top to the video I did on that exact topic of when you could potentially refinance. And what I mean by that phrase is that just because interest rates are higher right now, it doesn't make it necessarily a bad time to buy, because we're looking at lower interest rates in the future with potentially home prices stabilizing or still appreciating. So I think I did a video on that too, and I'll maybe link that one as well. But long story short, if the monthly payment and what you're getting for the home and the value for the home is there, you can always refinance down the road. So in the current, kind of where we're at this year and where we're at currently here in September, is we've seen the Fed make comments to really scare the market into those interest rates pushing up. We're likely going to see that come down over the next 18 months. So put your comments below. Where do you think interest rates are going to be? I would love some feedback from you. Stay safe, and we'll see each other again very, very soon.